All right, so today we're going to get into something pretty interesting, a really thought-provoking framework for the UK economy. And here's the kicker. It's not about winning the next election. It's about building something that's actually meant to last, like for the next 20 years. And really, this is the core question, isn't it? What if you designed an economic plan that wasn't about scoring points for the next election cycle, but was actually built for the next 2 decades? I mean, just think about that for a second. A strategy that totally ignores short-term political drama to focus purely on long-term structural health. What would that even look like? You know, what's fascinating is how this plan defines itself, mostly by what it's not. It's not trying to push a particular ideology, it's not trying to be populist, and it's definitely not trying to be punitive. Nope. The one and only goal here is to build an economy that's just, well, structurally resilient, something that can actually handle the shocks that are bound to come our way.
Okay, so before you can even think about fixing something, you've got to know what's broken, right? And that's exactly where this proposal starts. It lays out a really clear diagnosis of what it believes are the UK's fundamental economic problems. And it boils down to 3 big interlocking weaknesses. First up, you've got these stubbornly high structural costs for things we all need. You know, energy and housing. Then there's the fact that the UK seems to struggle with capital formation, basically creating and investing money, especially when you compare it to its peers. And third, and this is a big one, is this idea of a K-shaped economy. You know what that means? The top arm of the K is shooting up. That's the asset holders, their wealth is growing. But the bottom arm of the K is pointing down. That's for wage earners, who are kind of getting less behind.
And this is a really important point the proposal makes. The problem isn't a lack of smart people, or capital, or global connections. The UK has all of that. The real issue, it argues, is a lack of sequencing. It's like trying to build the roof before you've laid the foundation. The focus has been on shuffling money around, redistribution, instead of first tackling the massive core costs that make everything so expensive in the first place.
Okay, so if that's the diagnosis, what's the cure? What's the core philosophy driving this whole thing? Let's get into the foundation for the proposed changes. And the principles here are a pretty big shift from the usual playbook. First, and this is key, the idea is to hammer down those structural costs before you even touch redistribution. The sequence matters. Second, reward actual work and productive investment, not just shuffling assets around. Third, treat infrastructure as a national asset that compounds in value over time, kind of like a long-term investment. And here's a crucial one. This whole thing has to be democratically reversible. A future government can change it. Its survival depends on it actually working for people, not on being locked into law. So you might be wondering, is this libertarian? Is it socialist? Well, the proposal itself sidesteps those labels. It's framed as something different, growth first statecraft. Basically, a super pragmatic approach where the #1 priority is just getting the fundamentals of the economy right to foster growth. All right, let's get to the main event, the real meat of this proposal. We're about to walk through the 5-phase, 20-year roadmap that's supposed to get this done. So here's the roadmap in a nutshell. You start with the absolute basics, energy and tax. Once that's sorted, you move to infrastructure. With a stronger foundation, you can focus on industry and skills. Only then do you tackle the really tricky stuff like land reform. And finally, you get to the phase of wealth accumulation. See how that works? Each step is meant to build on the last one, creating momentum.
So why start with energy? Well, think about it. It's the master input cost. It affects literally every single household and business. The strategy is to get some quick, visible wins by aggressively lowering those costs, while also simplifying the tax code. It's all about building trust and showing people this is for real, right from the start.
Phase 2 introduces a really interesting idea, the Sovereign Infrastructure Vehicle, or SIV. Now, this is an old-school nationalization. It's envisioned as a commercially run company with an independent board. It would take majority stakes in key utilities, and here's the important part. Any profits get reinvested into the nation's balance sheet, not spent on short-term political pet projects. Okay, so once energy costs are down and the infrastructure is getting stronger, the plan shifts to industry. This means things like tax cuts for businesses, but with a string attached, you only get the break if you reinvest the money back into your company. And at the same time, a huge push on skills training and apprenticeships to build up the workforce.
Now, you can really see the long-term thinking when we get to land reform. This is always a politically explosive topic, right? So the plan doesn't rush it. A land value tax would be introduced very, very slowly, phased in over a decade or more, and only after the earlier phases have hopefully delivered some real growth and built up public trust. No shock therapy here.
So in this final phase, after years of work, the new infrastructure starts to generate a surplus. What do you do with that cash? Well, a chunk of it gets funneled into a new sovereign wealth fund. The goal is to invest that money globally and let it compound for decades, creating a huge pot of national wealth that makes the country less reliant on taxes in the future.
All right, so any plan can sound great in a presentation, right? But the real test is what happens when it gets punched in the face by reality. What's cool about this proposal is that it actually tries to do that to itself. It includes its own critique, its own stress test against some really tough questions. And it starts with maybe the biggest question of all. The plan looks itself in the mirror and asks, is it actually fair?
And here's how it argues, yes. The whole point is to lower costs universally, for everyone. It's designed to reward work, not just wealth. It tries to fix the fundamental scarcity of things like housing and energy, and to limit rent-seeking. And maybe most importantly, it's about growing the whole economic pie, so there's more for everyone, instead of just fighting over how to slice up the same old pie.
But what about a worst-case scenario? Let's say a massive global recession hits right in the middle of all this. Well, the plan is pretty honest about the good and the bad. On the plus side, having stable revenue from your own infrastructure and secure energy would be a massive advantage, a real buffer. But on the downside, the simplified tax system might not provide the same automatic safety net. It's a clear admission that this would be a tightrope walk. It would need incredibly disciplined leadership to navigate a storm like that.
And that brings us to the ultimate point about making this thing last. At the end of the day, its survival isn't about clever political maneuvering or locking it into law so nobody can touch it. No, it's much simpler than that. Its durability has to come from delivering results that people can actually see and feel in their daily lives. We're talking lower energy bills, more available housing, better jobs, and wages that are actually going up.
So, let's fast forward. If all this were to work, after all 5 phases, what's the end game? What does the country look like in 20 years? What's the vision?
Well, the vision is pretty clear. The goal is a UK that's secure in its energy supply, a country where land is used productively and manufacturing is competitive again. Imagine a nation with a strong, compounding sovereign balance sheet, a place where the basic cost of living is structurally lower, and maybe, most crucially, a society where that K-shaped divide, the gap between those with assets and those with wages, has finally started to narrow.
But the whole thing doesn't end with a neat little bow. It actually ends with a challenge, a question, really, posed to anyone reading it. Where is this weak? What have I missed? And I think that's a fascinating way to end. It's not a declaration, it's an invitation to a debate. The thinking is that for any plan this ambitious to even have a prayer, it first needs to be picked apart, stress-tested, and survive some serious scrutiny. And that's a powerful idea to leave us with.